Hello guys, and welcome to this week's episode. We are joined by Idris Tabrizi, who is the founder and Chief Executive Officer of TradeSimple FX. Idris, it's very, very good to have you here.
Thank you very much. Pleased to be back. Pleased to be back amongst the community. Active, love being active, and it's been a little while now. So yeah, looking forward to seeing how it goes.
Yeah, well, I know that a number of the members inside the community are very glad to see you back active and amongst everything. So thank you for that. Now, I know that we were speaking off air, Idris, just a little bit about the importance of trying to be a patient trader. Now, I know that the methodology that you've come up with and really what you promote is focused around very much analyzing technically what's going on. But that does sometimes require a little bit more patience, especially when you're waiting for a setup in the larger time frames and stuff. Isn't that right?
Absolutely. I mean, prime example, I was speaking to Angus, also from Dubai, and one of the issues he had was he was having, multiple trades a day, right? Loads of different opportunities, but his expectations and his actual kind of, profit at the end of the month was still in the blue, it was still in the green, but the kind of risk and the drawdown, the figures just didn't make sense. So again, what we've asked him to do is, dig into his trading journal, document his trades and find out what was going wrong. So fast forward a month from that, you could kind of really see that, just by not taking certain trades at certain times could really adjust his end kind of plus percentage at the end of the week. So it does really go to show, look, less is more sometimes. Positivity and kind of, ending the week in the plus side can be due or increased from like the trades that you didn't take. So yeah, I mean, psychology and having a plan and a system in place is so important, and that's what we're really big on.
How much emphasis do you put on not taking a trade as opposed to trying to find a trade, when you're kind of teaching people or even practicing yourself?
Yeah, so I mean, like I always say to people, we almost want to have like a semi-automated trading process, right? That you have to manually execute, right? So again, you've got your trading rules, these things that you're always looking for, right? To maintain consistency, to maintain that kind of that systematic approach, right? And when you start ticking off these checklist points and you're thinking, right, this is looking to be a potential opportunity that we might be able to get in soon, as you're about to kind of push that trigger, ask yourself a few questions, right? Ask yourself, do we have enough kind of volume left? Is there enough kind of time left in this session we're looking to trade? Is it conflicting with anything else we're looking to trade? Are we getting enough reward for the risk we're putting ourselves exposed to? And various different bits and pieces, right? So when you're at that point, just then take a step back and think, right, find reasons not to take this trade now. Anyone can justify taking a trade, right? And as a new trader, that's what we get lured into, being active in the markets, buying and selling and buying and selling. And the more that we've got on our plate, the harder it is to juggle, right? So less is more, like I say, and as a new trader, you learn so much more from having less to focus on, but the less that you focus on, you focus more on, if that makes sense, right? You dig into those trades much deeper, and that's how you learn and progress, in my experience and from what I've heard from other people that have obviously progressed similarly.
Yeah, no, you are very right, and even that's one of the main kind of, I guess, bits of ethos that we have here is very much focus on a few very simple key things, and that's once you have your plan in place, it should, as you said, be very much semi-automated in that you know what the plan should be, and you're not just going in looking for something because if it hits all your criteria, you take the trade. If it doesn't, you don't, and I think that saves a lot of people from themselves and from being a bit too greedy, and it takes all of the stress of trading. It's very stressful psychologically, and it just takes it away.
I can 100% agree, and that's where a lot of kind of issues come in as traders, right? Kind of trying to combat that psychological burden, and as traders, we can eliminate that if we have realistic expectations. People that come to the financial markets and bits and pieces, they're looking to trade certain instruments, gold or whatever kind of instrument they're looking to trade, FX, they could have various different trading pairs, right? But I think where a lot of people go wrong is having too much or too high expectations. And when they don't fulfill those expectations, it's like, a downward spiral, they kind of lose control and very, very quickly as well. Money management for a new trader is, I feel the most important thing. Having realistic expectations, being in absolute control of your money and not having to, explosive expectations to, flip £1,000 or $1,000 into $2,000 by the end of the month. It's not sustainable. And again, a lot of the issues and psychological issues can be kind of, eliminated by being realistic and not expecting too much too soon.
No, I agree. And like we said, there are an awful lot of different assets that somebody can come into the financial markets and try and trade. They hear a lot in the news about, either the stock market or the FX market, not so much the bond market, but also cryptos and things like this. But, from someone like yourself, who is very much a technical trader, should we say more so with, the addition of the fundamentals, but primarily based on the technicals, if that's fair to say. What asset classes do you focus on? Where are you trading at the moment, and how does that apply technically?
Yeah, so at the moment, obviously crypto is pretty hot still. We've obviously had that big kind of massive sell-off. I mean, with regards to kind of headlines and bits and pieces, it seems everything seems to be coming like sequential waves. So when Ethereum hit Ethereum GBP pushed from say £1,500 all the way up to £3,200, we had all those complementary headlines, right? They all seem to follow one after the other. PayPal, Visa card, and all these different kind of companies taking it on and pushing it higher, and all positivity, all working in favor. And then all of a sudden we exhaust, we hit some sort of kind of high price where everything's always going to follow with a market correction, right? It's only natural, but everything then seemed to be falling backwards, right? All the Elon Musk headlines, obviously with the China kind of banning cryptos, all the Binance regulatory bits and pieces, which actually seem to lift the pound or lift cryptos over the last couple of days. It seems everything seems to be coming in waves. You see what I mean? And I think that puts a lot of fear into retail traders' eyes, because you have to understand when you're investing or trading in certain markets, have realistic anticipation or expectations of what you can expect to have in terms of drawdown. Crypto markets, right? We know how volatile they are. If you're looking to trade crypto markets, expect 50% drops in 3-4 days, because it happens. If you're looking to invest in equity markets, you can expect 10, 15, 20% moves, depending on whether you're trading, index funds or kind of direct stocks. So, have these realistic expectations and manage your money accordingly. And I think that's where a lot of people go wrong. Again, they don't plan for this. They don't really know what they're doing or where they're going.
No, I would agree. And I think that recently, because of the massive news and because of the massive moves that we've seen in crypto, especially with, people like the Dogecoin millionaire becoming quite popular, investing $180,000, and which I'm pretty sure was pretty much all of his net worth. And then obviously becoming a millionaire, well, 2 times over, is worth $2.5 million at one point, at around 0.6 or $0.7, per Doge. But I think people have idolized this, and it's really given people an unrealistic expectation. And then I think that creates a big divide between the retail traders and the hedge funds, who just want to beat the indices by 1 or 2%, which only results in about 10, maybe 15% return. And obviously that might be lesser if the inflation worries are true. But I feel people come into the market, or at least now, and they don't quite have the same expectation as what they should. And it could cause an issue for these traders as they grow up and realize the markets actually can be quite boring.
Yeah, no, I think I was watching a Gary Vee interview as well, and what he was saying was so true, so true. And he's quite a direct, straight down the line kind of guy, but he was basically saying that, one, it's good. I think all the media and bits and pieces getting people involved and interested in crypto is good, because most of my friends, people my age and stuff, they're not really interested in investing. They work their 9 to 5, paycheck to paycheck. They live their life, right? A lot of people now have obviously seen potential from investments. Unfortunately, they've kind of been ill-advised. So, they've seen, like you say, the Dogecoin millionaires and bits and pieces, and they only see the glorious side, or the glory side behind it, and they don't so much see the losses. And the majority of these people are going to lose, right? It's a zero-sum game, and if you don't have an investment plan behind you, or you're not allocating a realistic proportion of your investment portfolio to different asset or spread asset classes, then you're setting yourself up to fail effectively, aren't you? So that's where I think a lot of people have gone wrong. They've been not ill-advised, but they've been not misled either. But they've been lured into these big potential rewards. They've gone all guns blazing. They've lost a lot, and unfortunately, for the majority, that will happen. So at the same time, I think it's quite good, because it makes people aware, and hopefully now that people start investing in their future from a younger age, or at least at all. You know what I mean? So It's just a bit of a shame to see, you know, so many people get burnt, but how things are, I suppose, at the moment with the media.
Yeah, it's just the nature of the beast. But well, let's have a look technically at some of these. Let's say we'll start with the crypto markets, if that's okay with you. I know that you're quite a fan of Bitcoin, Ethereum, and then also Cardano. Is that fair to say?
Yeah. I mean, it's something I follow with my brother quite closely. He does quite a bit of research and bits and pieces, forwards and some bits and pieces over to me. Like I say, I'm more technical based, so he's reading all these bits and pieces. He's more of a kind of he likes to trade. I like to invest. So especially with crypto markets, I'm more, you know, sit and, you know, dollar cost average, put a bit of money in. There's things that I'm waiting for, and we'll get to that in a second. But like I say, at the moment we're kind of moving sideways, so I don't want to be too aggressive with things. But like I say, am I okay to share my screen now, or?
Yeah, absolutely.
So we'll go with that screen number one. If we take this, see everything?
Yep.
Yeah, cool. So, I mean, you know, on a technical front, and how I was updating my guys was generally, I don't see really any kind of irregularity in this. Obviously, and we'll get through to, if I can just move it, we'll get through to kind of Ethereum and stuff in a second as well. But, you know, when we broke, you know, 30K previously, we just extended much higher, and things were just super aggressive, right? So just kind of painting the picture a little bit, you can see here, you know, dating back kind of summer 2020, when things really then started to kind of ramp up, and then we had that massive spike, a bit of a pullback, and things were just nuts, right? Things were absolutely nuts. This is the daily time frame, and then kind of, you know, a couple of weeks after that, we then extended much higher and almost doubled up in price again, right? So when we broke 30K, pushed just shy of 60K, and then, you know, we kind of exhausted, we topped out here, and then kind of scalloped over. Initially, we broke this kind of support price of, you know, 52K, which we had marked up, 52K, you could argue 52 to 50. And then we sold off, and that's when the bloodbath really started, right? And all these headlines and stuff started coming out, flagged a big concern, lots of panic selling, and then all the sell orders came in, started kind of unbalancing those kind of market orders to see that kind of continued sell-off, right? And this is what I was talking about, where I said, look, we're in a sideways market now, a bit of consolidation. What can we see, and what are we going to do? So, like I say, I'm not really too concerned unless we break and hold below 30K. For some reason, I hear a lot of talks of 24K. I'm not really too sure why. I don't really see anything really on a technical basis here. There's a little bit of, you know, consolidation here, but this isn't really anything for me to, you know, think, well, if we break support, that's our next zone. Like, I just don't see it. My concern would be if we broke 30K and closed below that, right? Again, I'm big on whole numbers, like psychological trading numbers. Definitely in the FX space, you know, you're talking, we'll get through that in a second, but with Bitcoin, like I say, we've had that support price here, 30K, a bit of a threat previously, 28.5, and came back up, right? And now I feel like on a technical basis, like I say, kind of scaling into what we've got now in recent trade price. If we break above 35K, which we are now doing, then I think we're good to maybe see that 41K price again. And then what I'm really looking for is a break above that, and then a pullback to say, look, we've now broken the consolidation, that sideways market, to the upside. Now let's think about, you know, how we can kind of dollar cost average, drip feed a bit more money in, as long as we stay above that resistance price. So resistance here, if we can obviously eventually break above it, pull back, excuse my my poor arrows, but, you know, if we can break above that, find support here instead of just ranging, then that to me is a signal to be like, okay, let's put a bit more money in, right? Ethereum. So Ethereum, very much the same, where there's nothing irregular here to me, right? On a technical basis, if we did break south of this 1300 price, then I would have been like, okay, right, well, actually, yeah, the tables have turned. This was, you know, my final support protocol. If we do break beneath that, probably flag concerns, very much the same as Bitcoin. So again, in comparison, if we broke this here, would have flagged concerns for me. However, you know, we are still up. You know, the bigger the rally, the bigger the pullback, natural, right? And again, we've got that kind of sideways market movement here. We did dip below 1500, which was initially a bit of support for me. So let me just kind of chuck that up there a little bit. That's, you know, there's no real science behind this. It's just marking highs and lows, very basic highs and lows. No real kind of demanding technical analysis here at all. It's just, you know, pointing out the obvious. And this is our new support zone, right? 1300, we resisted, then we broke, and then we pulled back, supported, and this is where we are now. Thankfully, we're starting to see a bit of a, you know, a bit of a reversal. We failed to set that new low sequence. So again, sell off, pullback, sell off, pullback, sell off, pullback, sell off, pullback. We bottomed out here a little bit, and now we've seen a new high. So we've changed sequence. And that kind of indicates, look, we've found support, we've taken off, there's a bit of demand here now. Are we going to see that 2050 price? So like I was talking about on Bitcoin, as we can get rid of that, that's winding up a little bit, but as we break above 41K, we're looking for a break above 20.050, right? So 20.050 here, we'd simply be looking for something very, very similar to this, to then consider, you know, being a bit more aggressive, understanding that we're out of this sideways move, kind of market now. And this is where I'd be looking to, you know, add to my kind of long position. So me personally, I'm kind of long bias on crypto still. From an investment point of view, it's not something I'm like aggressively trading at the moment, but it's something, you know, I'm constantly feeding a little bit to it, with the hope that, you know, we really do break above that 20.050, and we do kind of set new highs towards the kind of the end of the year. And that would really do me well. If we saw a rally kind of the same kind of measurable context as we did previously, you know, 5-6K would be kind of outstanding, really. But, you know, we'll take it as it comes. I'm not really one to give projections on actual defined prices. I just take it as it comes and trade what you see, and go from there. ADA, so Cardano, this is a bit of a concern. My brother's been asking me to update this. That one price, that £1 whole number price, right? That is, you know, it's a bit of a sticking point. But again, we've had that kind of reversal price where we've stopped setting those lows. So again, not a fan of trend lines. They're very, very subjective, but kind of identifying it for, you know, to display what I'm talking about, I think they're quite useful. So, you know, we're starting to break out now, and I feel like, you know, the next move for Cardano is something similar to this, where, you know, we're looking for a new high to break above £1, and then we can obviously look to extend higher. There's a little bit of a messier chart here, but I think, you know, it's got quite, you know, decent intrinsic value in compared to, you know, Ethereum and bits and pieces. It's something that I kind of believe in a little bit, and I think will hold value going forward. So that's why my list is quite short, but at the same time, you know, I can't focus on too much because I've got a lot to focus on anyway. So
yeah, that does make sense. And also, just a caveat on top of there, you know, I think those, in my eyes anyway, personal opinion, I think that those are going to be the top 3 cryptos in the immediate kind of future. You know, there might be some meme coins that come and go, but, you know, an XRP may be up there, but there's still a lot of concern about the SEC. And, you know, for my mind, it's you know, Bitcoin is one thing, but I truly believe, and I imagine you're probably the same given that you're more of an investor, but it's the blockchain technology behind it, and smart contracts are one of the best things that come from the blockchain tech.
Yeah, I mean, we're going to hear about that, you know, ADA, I think in August, aren't we? So again, whether that's already priced into what's going on at the moment and what we see here, not entirely sure. You know, obviously with FX and bits and pieces, you know, we know what's going to happen generally with interest rate decisions and bits and pieces, big economic data points. You know, we generally have an idea from interviews and headlines what's going to come out on that day of that release, and it's generally normally priced into the markets, right? You've obviously got, for example, Fed rates and bits and pieces last week, nothing had changed. However, it's the monetary policy and the bits that come out, you know, that are not unpredicted, but, you know, not factored into the markets at the same time. So I think you know, it'll be interesting to see whether, you know, in August, when the smart contracts and bits and pieces will be here a bit more, whether we'll see a surge once it's confirmed, or, you know, whether it will just kind of sit tight or it's already priced into the market. So that will be interesting to see, I think.
I agree. No, I agree. And also, just so you guys know, if you guys are looking at the ETH and the ADA chart and think that they might be a little bit off, it's denoted in pounds. So the Bitcoin is BTC USD, whereas the ETH and ADA are against the pound. So the numbers are a little bit lower, obviously because of the strength on the pound. But speaking of strength on the pound, let's have a quick look at some of your Forex pairs and some of the analysis.
What we'll do is, we've had personally in our groups quite a lot of focus on the yen, obviously. We've had some really, really good moves and really good opportunities. And we were talking about, you know, we're big on trading between the zones. We're big on having logical explanations between your trade or for your trading decisions, right? If you can kind of empathize with the process that you're looking to kind of implement, then you know what you're doing during X, Y, and Z period, right? And what I mean by that is entering a trade is one thing, right? Looking for justification to enter and pull that trigger is one thing, but also managing that position going forwards is another thing, right? Position management, really squeezing the most out of those trades, but also being able to reduce any unnecessary exposure and kind of mitigate any losses as soon as possible. So, you know, the same confluences that we look for to enter a trade we also look for those confluences to hinder our trade, right? To restrict our trade from reaching its kind of take profit target. So what I mean by that is we've just listed here, for example, look, we've got 155 whole number on GBP Japanese yen. We've got an area of supply here, 4-hour supply, resistance, and it's got a monster 1 to 11. So we've kind of quantified that just based on, this was last week at the time of Fed. That was the lows we set before then correcting pretty much 100%, right? So we're going to look to potentially take profit there. But we know there's going to be areas of demand here where we're going to want to scale out. Again, if we break that support, this is the next zone. We're going to look to manage our position or make adjustments to our position. And then again, eventually the low and so on and so forth. So
Idris, just quickly on that, when you mentioned about scaling out, how much roughly will you be looking to take, and what's your level of confidence in each of these, should we say, these target zones?
So yeah, I mean, like I say, we look at the lower time frames. Once we've got 4-hour structure in front of us, we look at the lower time frames to then make adjustments to our position. So generally, we have a minimum rule of 1 to 3 as a risk reward potential, right? So we're risking £1 to gain potentially £3, right? So that's our minimum. And as our baseline, as a rule of thumb, we want to move our stop loss to entry price as long as we're happy with our entry at 1 to 1. So like I say, this is kind of a rule of thumb. If you've got a 1 to 11, for example, you're not going to start scaling out at 1 to 1.5 because that just doesn't make logical sense, right? You're going to realize a lot of your profit out so early that you're not going to see any real potential in this kind of the longevity of what potentially is here, right? So let's go through. This is a bit of a rare one. GBP Japanese yen, 1 to 11s for us don't really occur much. However, if we look at, Swiss franc Japanese yen, this is something we took last week and held and closed out yesterday, in fact. So here, for example, we've got a bit of a double top here on the hourly, and then we've got a 4th and 5th on the hourly, but it looks like a 4-hour exhaustion pattern, right? So to us, signs of a reversal. We've got our 4-hour supports, resistance zones, and that's how we look to trade. We're basically measuring 28 pips as a stop loss, and we've got a 1 to 7 here down to support. We know our first major or consideration would be down here, right? So, you've got 1 to 2.39. You want to probably take a bit of profit there if you've got a 1 to 6. If you've got a 1 to 3, us, like I say, rule of thumb, 1 to 1, stop loss to entry price, 1 to 1.5, maybe take a third of your position, 1 to 2.5, take another third of your position, and then just trial your stops. So instead of taking profit as you hit your take profit target and closing it out, it's sometimes just best to, just to tighten your stop loss in case that next zone that you're looking to take profit at does break, and then you've got that extension, that further continuation. And that helps balance out, if you're closing out partials along the way, you're not always going to realize that full 1 to 3. If it's a 1 to 3 setup and you're scaling out systematically, you might average, 1 to 2.2 or 1 to 2.5. So every now and then you might break that support zone, that final take profit target, and then that helps squeeze a little bit more profit out to, to just to not limit yourself, I suppose. But, we're looking for all these different things, all these different factors, the same things that we're looking for to enter our trade. So whole numbers, psychological numbers. We're looking for areas of demand, areas of support, resistance, breakout highs, yearly highs, all these kind of bits and pieces, the same things we're looking for to enter a trade. They're going to be the same things that stop us from reaching our take profit target. Does that make sense?
Yeah. That makes perfect sense.
Yeah, I mean, we've got various different pairs here as well. GJ, Swiss franc yen, generally, they're all kind of yen backed. This is due to kind of yen strength and bits and pieces. But I was saying earlier as well, it's, you've got to have comparative pairs, whether they're indices or, commodities or something. You've got to have something to back one off the other. You can't just be so focused on one pair because you don't know what's going on with the other respective pairs. So
yeah, I wanted to, I was gonna say, maybe you can just you'll elaborate this right now, but I see a couple of the Swiss franc is in there, and also the Japanese yen. Is it that you feel comfortable with those, understanding those economies? What's the, what's your particular motivation for that?
Sure. So like I'm saying, it's important obviously to understand, you've got different pairs that move at different paces, right? So daily pip ranges is an indicator for me. If GBP Japanese yen's averaging 100 and 150 pips a day, but Swiss franc Japanese yen's only averaging, 50, it's a less impulsive pair, slower paced. And that might be something as a new trader, you might be more inclined to follow a slower paced pair because it allows that pair to, breathe and do its thing and unfold, where, a faster, more impulsive pair, it might throw you off a little bit, flag, concerns, or, you might not be able to keep up with what's going on. So Me personally, I like to have, a few different pairs. I can back one off the other, pair comparison, and then pick the best out of the bunch. So GBP Japanese yen, we've got a lot of GBP data. This could have, it could break resistance here, for example, because we've had, I don't know, retail sales or GDP figures for the pound, and that could push GBP Japanese yen up. However, these other comparative pairs, that's been directly impacted by economic data. Whereas these other pairs, Swiss franc yen, Australian dollar, Japanese yen, they could still be on our resistance. They could still be good for shorts, right? But if you're not measuring one or two of the other ones, for example, these two against GBP, you don't know that that might have been influenced by pound data if you're a new trader. And then you might think, oh, actually, we need to buy this. But that could then just be short-lived, come back into structure, and we could still be on for shorts because we know we've got something to compare against. Going forward, right? Does that kind of make sense?
Yeah, no, it does, absolutely. There's got to be, you can, it's actually, I guess in one way, quite an advantage to fully understand the relationship between, what has caused the movement in one currency pair. Because if, like you said, if GBP Japanese yen goes up because of strong data from GBP, then you know that you might be on, let's say, a short for like the euro. Euro pound, or you might be whatever that might be, so you can always use one to influence the other or understand the influence of the other.
Yeah, exactly. And it's just, as traders, there's a lot to digest, right? Especially new traders, and without trying to overwhelm people, it's always quite, I try and without teaching people to suck eggs, so to speak, I like to make them dummy-proof things effectively, right? And we don't have to master economic data. We don't have to master, fundamentals initially as traders, but just being aware and avoiding those situations and circumstances, that can save you money in the long run. It can save you money in the short term as well, but it can just make sure that your decisions are more, prepped and planned, as opposed to, taking a trade. It's being, it's on resistance. For example, this trade here, right? We could have super bad figures for Australian dollar, GDP, and that's sold off here. But as a new trader, you might think, and if let's say you're unaware of that, and we sell off, great, right? Your technical structure is fulfilling its potential, and it's following what you thought it would follow. But if you're not aware of what has kind of catalyzed that move, you haven't really learned anything, right? You've kind of caught a lucky trade. So, we don't need to be masters.
Can't replicate it.
Yeah. We need to be aware of what's moving the market, because we need to take that in and digest that and, understand that, yes, we have marked on a resistance zone. Yeah, we did consolidate there for a while, but the actual move into profit was catalyzed by this or that or this or that, right? So, we don't need to be absolute masters of everything, but if we can, master a few things and be really precise with the specific strategy we're looking to implement, I feel that, if we're just aware of other elements and other aspects that might factor or cause a concern, then, we're covering as many angles as possible.
No, I agree. Absolutely. Well, look, it's been an absolute pleasure, Idris, to have you on. And very much, I look forward to catching up with you again very soon.
Perfect. Thank you very much, Ben.
Thank you very much. And guys, if you want to make sure that you're following all of Idris's trades and some of his trade ideas, make sure that you download the ARIA app and subscribe. And then also give him a like, share some of his content, and I look forward to seeing you guys all in the app. Thank you guys, take care.